Welcome to TheoTrade. This is Don Kaufman. It's May 21st, 2018. You are watching the Theo Night video. Markets last night, that is Sunday evening, gapped higher, taking us, well, to nothing that was unexpected. We actually opened right at 27.31, pretty much on the button. For those of you that tune in on a day-to-day basis, that 27.31, we marked it on our screens just about a week back as one of our kind of key, what we term gravity points. And people, after we hit that 27.31, I mean, that's pretty much all we wrote throughout the course of today's trading session. You know, if you missed today's trading session, sure, we were up 20. We gapped higher again last night when the futures reopened on the news out of ultimately trade war has been called off between China and the US. But people, we only did 819,000 contracts. Now, granted, we have 3 minutes left in the trading day, but that is one incredibly light trading session. One thing I want to bring into perspective before I go really any further in today's session, and that is the markets, they gapped quite a bit higher. Now, first thing into perspective is that the S&Ps were strong on a relative basis versus the Nasdaq. That's one thing that kind of grabbed my attention. The other aspect that's really grabbing my attention has to do with the SPX. And I'm going to take you a little bit into the SPX here for just a moment. As you guys know, on the weekend updates, I often talk about expected moves. This past weekend, no different. Now, the expected move throughout the course of this week, all right, as you can see on your screen, that takes us about $33 higher or $33 lower. Now today, we get this $20 move up in the SPX, and you would anticipate volatility being quite a bit lower. So I looked over at the VIX and I'm like, all right, but the VIX has, really not been working great lately. And people, listen, I've been discounting the VIX for years. Right? It's 30-day out volatility. But here's one thing that I did find quite interesting on the front when it comes to looking at the SPX and looking at these expected moves. And that was, I opened up the options that expire, of course, this Friday. It's May 25th. And of course, we're coming into a 3-day weekend. And the volatility is sitting right around 10.7%, but it's about a $26 expected move. And why that struck me as a little bit odd is that if you looked back at this past weekend, and well, we look at this every single weekend, and I kind of take you through it, the volatility was roughly 10.8 on a $33 expected move. So why bother bringing this up? Well, first of all, you were looking to have a $33 expected move throughout the course of the week. Yet in this particular case, we get a $20 expected move, and yet we still have $26 baked in, and the volatility does not contract. And that's the point to be taken from this, is that the volatility number itself, it did not contract, which, I mean, you're like, oh, well, so what does that mean? Well, first of all, we do have some Fed minutes coming out later this week. A little bit more geopolitical risk, possibly. All right, a few more announcements, yada, yada, yada. The marketplace still sees risk. That's the bottom line with it. This is a week where we kicked it off with the S&Ps moving up. And by the way, there's going to be no surprise whatsoever that we're going to close on 27.31. We hit that one on the button. That's what those gravity points are really about. But the interesting thing to me, and this is unexpected, I didn't see us, okay, in terms of risk. I figured risk would kind of abate as this week went on, given the fact that it's Memorial Day, right? If you're not here in the US, what does that mean? I mean, it's like the first weekend of summer. Everybody packs it in. And, initially this morning, I'm like, that's it. This is going to be terrible. But I'm very surprised. And by the way, as we're coming closer to the close, I want you to see this. The volatility, there's the closing bell. The volatility just expanded to exactly where it was over the weekend. So it's telling you, don't get off your game. So I didn't want to just look at the SPX. I also tuned into the XLF, the financials, because to me, the financials, they're the ones that really hold the keys. All right, we still have a 42-cent expected move. And again, coming into the weekend and looking at this, we had about a 52-cent expected move. We already saw 20 cents of action. Again, to me, the expected moves seem, again, peculiar and yet very high. All right, and they're high in accordance with what I would believe, given the fact that this is going to be a little bit of a holiday week. Now, I'm going to completely switch gears for a moment. So we've been looking a little bit at the S&Ps, and when I say switching gears, we're going to take a quick glance at a couple of levels. So I'm going to take you to a 30-day 1 hour, and one thing I just want to drop into perspective over the last week plus of trade is that if you listen to kind of market pundits, they're like, it has been a rip and rally today. Rip and rally where? Oh, right back here to 27.31. Well, that's pretty much where we spent the entire trading session. We were there a little bit last week. We stopped at 27.31 last week, sold off a little bit, and gapped higher into it. A couple of days before that, yeah, even on Sunday and Monday, we were at 27.31. I mean, if you're a trend follower, oh, the trend is down. We've actually been absolutely flat with a little bit of volatility thrown in. I mean, really, one of the things that you have to kind of put into perspective here is that markets have been inside. And again, this is just over a week of trading sessions. This is Monday, ultimately to Monday. You've been from 2740 right down to 2700 itself. You're in a 40-point range. You're boxed in. Okay, that happens to be specific to the S&P futures, but let's not kid ourselves. The S&P futures tend to drive the bus. If you want to zoom into the exact same time period inside of the Nasdaq, again, the marketplace is getting you to believe I'm rallying. Over this time frame, yeah, we touched all the way to 7,013, and here we are actually closing just above what we call the roundie, the 6,900. So there's been a very, very mild descent of about 100 points inside of the Nasdaq. Now, why am I bringing this up? This is not me saying like, oh, this is a very bearish move. Actually, it's a very, very mild move. If anything, the interesting portion of this, it's the Russell. The Russell is the equation, all right, that's just been taking the market a little bit higher. It's actually the Russell products that have been really pushing upon the S&Ps and even the Nasdaq and holding them up at this point in time. Now, here's an interesting position for those of you that do understand a little bit about pairs trading. I really like a couple of the pairs ideas. Specifically, I like the idea of being short Russell and long S&Ps, or short Russell, okay, and long some of the Nasdaq, because if the markets do, all right, let's say the markets start to turn and fall. The market starts to turn and fall. Now think about what I just said with short Russell. The market starts to turn and fall. I would assume on a percentage basis that the Russell will start to actually outpace the move to the downside. And the Russell happens to be one of the products that I'm short. Okay. On the flip side of that, though, if the market started to fall, okay, would the Nasdaq also tank a little bit? Yes. But on a percentage basis, again, I would expect the Russell to outpace to the downside. On the flip side, let's say that the market continued to rally. So if the market's going to continue to rally, once again, what we said was what? Short Russell. Okay, that's short Russell. And for example, long S&Ps. So if the market's going to continue to rally, you would expect that the rally inside of the IWM will probably fade out. And then the S&Ps may actually come up and take kind of the leading role in that. And there's a great way, if you guys have never done this before, it's worth the time to learn how to do this stuff, but to use a couple of comparison charts. And I'm just going to set one up, albeit briefly, for you here. And I'm going to set up the spiders as our primary product. And I just want you to take a quick glance at this, because again, it's very worthwhile in this particular instance. So you come over to study, go add study, go compare with. So we're going to compare the spiders, throw a custom symbol in. The first one I'll type in is QQQ. I'm actually going to use the ETF products. So we're now comparing the spiders versus the Qs. Go back up to studies, add study, drop back down to compare with, cruise over to custom symbol, type in IWM. What does it stand for? The Russell. So now we've got a little bit of a three-way comparison, but there's, a little bit of fault in a comparison chart. It's the starting point and the ending point. The comparison chart's only as good as the data in the comparison chart. So let's tighten this up a little bit. Let's take the time frame. Let's go from 9 months. Let's really tighten this up to just, for example, the last 3 months on a daily. Hit OK. Now, what's candle? You have to change from a candle chart. Why? You don't want to look at candles when you're comparing. All right, so line to line. And you'll see exactly what I've been explaining in here. And the product on top, okay, that happens to be none other than the IWM. Right here in the middle of the Qs, and down below happens to be none other than the spiders themselves. Again, the position happened to be short the what? Shorting the Russell and going long. And I'm most comfortable with long the SPY. I'm most comfortable with long the SPY because I think Nasdaq tends to be, it's a little bit of its own animal lately. This is a position that could be taken either using options, could be taken using futures contracts, could be taken using the shares themselves. I will elaborate more on this particular position tomorrow live in the TheoTrade chat room. Again, short the Russell, long the spiders. Thanks everybody for joining us here at TheoTrade. Enjoy the level 2731. Have a wonderful evening, everybody. Bye-bye.